Yo, what is going on, you guys? It's your boy Jerry Trades back again with another banger video. And on today's video, man, I have an insane market recap today for you guys where I did lose $2,800 trading Microsoft. And this was a huge trade for me. It was something that honestly I could have done a lot better. I did a couple mistakes here that I can arguably tell you guys are like no-brainers to avoid. And realistically, I would just kind of looking to provide a trade to my trading group and just get myself in something when realistically I probably should have stepped away from the markets or pulled out of the trade a little bit sooner. So let's go ahead and break down this trade today. I hope all you guys are having a wonderful day. And today we traded Microsoft. Initially, my main trade was Tesla. I woke up early enough to catch it, and it was right here at this entry at 389. I wanted calls for 390 that I signaled to my group in yesterday's class. And by the time I was already kind of like getting into the markets and kind of catching up here on my setup, setting everything up, contacting the Discord, market had already, look, 6:30 market open. Literally by 6:37 we had went from 6:30 market open of 386 in 7 minutes we went to 395. So keep in mind that is 390 95 $6 in share value in 7 minutes. That's a lot of money going into those markets very quickly. And we have a little bit of, I guess you can say unstable market conditions in this market here in March 2026. We have Iran and Israel war. We were blessed to have heard on Tuesday Donald Trump and Iran talking about a ceasefire kind of deal, and you can see that on Monday before pre-market we had this huge spike on that news, and then late after Tuesday's market, literally yesterday's market, we had another spike on Iran agreeing to that ceasefire. But later on today, they went ahead and announced that they will not be taking on that ceasefire, and everything is canceled. Now, I believe Israel is still playing very aggressively in this ceasefire. They're not trying to end the war. Saudi Arabia doesn't want to end the war. They want Saudi Arabia, they want Israel, they want US to go ahead and collaborate forces to rebuild the Middle East and I guess control it in a whole new way that honestly Iran is kind of just stopping them from, right? So this is a prime example of geopolitical tensions and how they can affect the markets despite all the other variables in the tech sector and energy sectors for sure being impacted because of oil. But tech sectors really, like, we had the software sell-off back in March 14th, March 7th that initially kicked off a little bit of a bearish market for us before the war, and now the war is just putting that cherry on top to make the markets go down. So Tesla has been announcing a lot of big projects, the Terafactory, we have the RoboCaps coming out here soon this year. So I was, very bullish on them, and this is where I made my mistake. I missed that entry on Tesla. I missed my entry on Amazon that I initially wanted to target a 210 call. Right here at market open, we opened up at 6:30. We opened up at 210 at 6:30, and we were going to go for 212. But I was looking at Tuesday's right here, yesterday's market, 207. I wanted to trade 210 calls from 207, but overnight, these things had already jumped up to 210. So I missed two entries, and I'm telling you guys, this behavior, right? I don't know how devoted, how dedicated of a trader you guys are, but me, like, I already overcame the fear of losing money. I already overcame the fear of entering positions, so I'm not as too timid, right? And I'm kind of aggressive when it comes to playing positions. And I already kind of understood that losing money comes with the game. It's more important to have the skill set and ability to recreate that income to make more money so you can continue playing the game, which is something I really want to highlight for you guys as option traders. Understand that this is a game for high income individuals, or more so risk on individuals. Like, you have to know what you can risk, right? And when people hear me lose 2,800, the cost of one contract was only about $50. So this same trade could have happened and I could have only lost $50. But when I own, 87 contracts of them, and I bump that position up to 102 contracts, then you are playing, almost a $2,900 position. So there's ways to minimize risk in option trading. So don't get afraid, but understand that, hey, if you're going to be playing big ball, trying to get these big numbers, because obviously higher capital has higher return. If today Microsoft would have been able to push for 377 like it did at market open, let me show you guys this. So at market open, we were at 377. I initially entered the trade here, targeting a 380. That went negative. I stopped adding to that position. That was only two contracts, $80. I remember that. And then I added again here at 375, targeting a now 377.5 call. not 380, and then I went ahead and added again over here at 373 with more than like probably like easily, bro, like 80 contracts here. So everything was already kind of spiraling against my favor, right? And this is where I can tell you guys that I kind of, well, let's first stick to what I was saying right here. If we would have went from 374 with how many contracts I had to 377, calculated and simulated profits would have been $16,000 in probably 2.5 hours. For me to risk 2,800 to make 16,000, that's where you come into, hey, the projected growth, the projected profits of the position, right? So that's what I'm telling you guys. When you play bigger capital, you're going for bigger numbers. All I really need is just what? 2,800 to turn into 16,000, and I will offset all of my losses for practically the whole month. So it's about, playing these correctly, though. If I would have taken puts with the same exact capital, and I would have entered maybe $2,800 worth of puts at 376, I probably would have had close to 12, 11, maybe even $13,000 in profits, and that offset all my losses. So I've caught myself in this behavior of trying to play aggressive capital to offset my losses in just a really big move in a day trade. And don't get me wrong, these are very possible, but as these markets are constantly shifting based on headlines going on in the war, like the whole market right now is just, any headline is just reacting to it, especially because we're so dependent on this war ending, on the economy better, on inflation coming down, on interest rates coming down. These are all negative factors that are impacting the market conditions, which I really want to highlight is important for you guys to understand as an option trader. You guys have to know the economic conditions. I know a lot of people just come into this, thinking it's just about pressing buttons, looking at charts and patterns and strategies, but 90% of it, honestly 70% of it more realistically, is all about economic conditions. And if those conditions aren't there in the economy, politically, or just in the company itself, no matter what you see on a chart, no matter what you see in your strategy or your patterns, it's not going to save you, man. So today, Iran went ahead and made that headline that they will not be continuing with the ceasefire, and this impacted the market in general. How do I know that it impacted the market in general? When you look at SPY, understand that SPY tracks the top 500 companies in the stock market, so this is more of a generalized trend of how the markets are moving. So you'll know when something went wrong by looking at SPY, because if the rest of the top 500 companies are doing bad, well, SPY is going to be doing bad. And obviously it's a ripple effect across all other sectors and all other companies, what you see here in SPY. So this is about when they announced it at 8 a.m. Boom, they closed the ceasefire. We got a little bit of a reversal there. But realistically, man, like I said, my biggest mistake here was, one, chasing the position, adding more to, I guess, a consolidating kind of trade here. Because you guys can see here, let me go ahead and, I'm going to clear everything up. So first of all, I entered because we had an oversold scenario. I tried catching this bottom multiple times. Tried catching it here. Didn't get too far. Messed up right there. I seen that we established some sort of supply. Tried catching it again here. And then immediately kind of went down a little bit. I believe I added more around here, because I thought we went below supply. Added. And then right around here was when I noticed I was in trouble. Look at this level of support here. That's pretty strong all across the day. Look at this level of support here at 673, and look at this level of resistance at 674. So 673, right? You hit, what is the support? Hit, comes up. 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 Resistance. Hit, comes down. 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 Now, this is really good if you're like, playing very short-term moves. But me, yes, I'm in a day trade, but at the same time, you have to understand something about, remember I mentioned in one of my other videos, theta. This is real. As time passes in a day trade, your values are losing, your contracts are losing value because they're nearing their expiration date, which is 1 p.m. So I knew that I was burning value of my time for this whole probably hour right here. We started at 7:04 and we didn't fix until 8:06, until we finally broke out. That right there was my biggest mistake, holding throughout all of this consolidation. At so many times, look at how many chances the market gave me to just cut my losses. And yeah, I was negative right here, maybe 48 or maybe 38%. And I did not cut my position when I should have. Because look, later on, that emotion of hope was just in me, just hoping that it would break above and target that 377. But unfortunately, it didn't happen, right? But realistically, whenever you're in a day trade, more specifically, and you see this consolidation, this sideways behavior, and it's just burning for a cool hour, it's a sign for you to just take it when you approach resistance if you're in calls, or if you're in puts, take it when you're near support and just get out. You know, it's better to let the market settle down and make its move. For example, like here, when we finally broke out of here, instead of me, you know, hey, hoping for my calls to go up, I could have cleared my position. Now, this is a tough part for, you know, individuals that understand this. I have a cash account, so everything that I invest, I don't get it back the same day when I sell a position. I have to wait till the following day. So this is where things get a little bit tricky because I deploy $2,000 in capital. Now, if I want to take another trade, I have to then deposit another 1,000 or 2,000 to start trading again because all my portfolio is deployed, which is also a big mistake that I've been making as well. You know, deploying almost 100% of the portfolio value has been extremely, extremely, extremely painful to me, and has a lot of consequences in probably my last 2-3 weeks of trading. You know, I'm trying to go ahead and just strike it big, get it out the way, but that's not how you want to do things, man. Especially like, because I was doing really good with just a $1,000 portfolio, taking swing trades. I had Costco calls, those went ahead and did me like 30%. I had some Tesla calls, those ones did me 70%. And I did some SPY calls that did 112%. So I was doing phenomenal, but it was when I added more capital to the portfolio, seeking one big move to kind of just get out, that behavior didn't get me nowhere, bro. And I share this with you guys because a lot of people give up before they find these patterns, they find these behaviors, and you don't really get to hear this side of trading, right? But I know that there's people out there that have extremely high capital, they have extremely high income, and they're not afraid of losing. But I don't want you guys to lose. I want you guys to learn to catch these behaviors, identify them, and how to fix them and react to become better traders. So, you know, obviously I lost a lot of money today, but hey, I share this with you guys so it can be your win and more than just my loss, because the money's not coming back, right? So why not make a video out of it to hopefully help someone on the other end, across their lifetime or in their trading and investing career, to hopefully create the lifestyle that we all desire, right? So right here, once it broke out, hey, if I would have cut my position over here at resistance, took the minus 40%, keep in mind I have maybe 60% of my capital left over. I could have then seen that we broke out below support. I could have entered puts here. And yeah, entering puts from here to that move, that's probably like roughly a cool 50-60% in profits. So let's say hypothetically I would have went and done this, right? We have a $2,900 position. We have 60% remaining, 1740, right? 1740 plus maybe a 55% return. It's going to be 957 plus 1740. I would have made back 2697, but I initially started the day with 2900 minus 2697, and I would have only lost $203 and not the complete 2900. Now that's where you bring in your stop loss and understanding how to switch your bias, right? Switching your narrative to, hey, more of a bearish approach once you see certain, key levels get broken here on your technical analysis. Technical analysis is always going to be your charts. It's just a fancy word for it. But just use that as a piece of advice, right? Like, I made the mistake. It's, of course, after everything's done that I see the problem. I see what I could have done better. And that's what it's about. A lot of people, like, unfortunately, when they're trading, they'll take the loss and they'll just be completely bummed out, blame everything else but themselves. But in this life, just in general, everything's accountability. You have to see what you did wrong and what you could have done better. So just being 100% real here, like, I could have for sure switched my bias, went puts, profited that 50%, made back majority of my losses, and only had a minus $200 day. But instead, marrying the narrative of these calls, hoping that Microsoft would eventually start that beginning of this uptrend, because look at how oversold it is, bro. This is, I showed you guys back in February. Let's not even talk about where we were at back in October. We were trading at $546 a share. Now we're at $369. This is an extremely oversold asset, and it's a company that isn't just a mom and pop shop. This isn't some Michoacana, bro. This is a well-established billion-dollar company. So this is, interesting to see this sell off and it just take continuous hits like this. But there is multiple factors that I could have looked in. I also paid the consequence of not being informed on the trade. I wasn't aware that Microsoft is currently having a lawsuit against OpenAI and Amazon for breaching some of their terms when they agreed to their policies on investment that Microsoft made for, I believe, I was researching it earlier. Microsoft invested over 13 billion securing a 27% stake in OpenAI, meaning they own about 27% of OpenAI. But in February 2026, OpenAI went ahead and partnered with Amazon and targeting AI agents, and it was exactly the market Microsoft hoped to dominate through Azure, which is their product. But now OpenAI and Amazon are working together to create this new product that's technically competing against Microsoft, but Microsoft gave them 13 billion to even get started on something like this, and they were supposed to dominate it. And now OpenAI is kind of breaching the contract or their policies and working with Amazon to just create competition for them. So this was extremely negative, kind of like a stab in the back moment from Sam Altman to, Bill Gates over there at Microsoft. So this was a huge kind of, I guess, dilemma that impacted the share price as well, aside from the rising tensions in Iran and Israel. And that was a mistake on my end. Like I said, this wasn't much. It wasn't a really high cognition trade. It was just me upset that I missed Tesla, upset that I missed Amazon, and just itching to press some buttons today. Immature behavior comes with immature consequences, and today those consequences did cost me $2,900. But at least I could go ahead and illustrate the losses, explain to you guys what I did wrong, and hopefully you guys can adapt to possibly, catching yourselves from not making those mistakes. And also, I think the hardest part as a trader, especially when you're playing with thousands of dollars, is just accepting you're wrong. Like losing fucking 40% of the position hurts, dog. Like it doesn't feel good. I was minus $1,500, and I was just like, damn, bro, like what am I gonna do here? That's horrible. But sometimes losing that 1,500 would have been better than losing the full 2,900. But it is what it is. You're gonna learn in this life that every opportunity that makes your life better financially, every opportunity that has that potential to, give you some sort of financial gain, it's a risk that you have to be willing to take, but also it's opportunities that you have to take. You have to learn how to lose now while you're young. There's some people in their 40s or 30s that have never invested, never started businesses, never lost in their lives, never played anything aggressively with their finances, and if they lose now, like, they have so much responsibilities, they don't have as much time to make it back, and they don't have that character developed to know how to continue going. That's why I can share my losses of $5,500, $2,900. I have another one that I had last week on, I believe, Google for $5,500. I'll record that one as well. But this builds your mind. I'd rather take these losses right now that I'm 23 than to worry about them when I'm 24, 25, or possibly even 30 with my first two kids. So I want to highlight that with you guys. These are always going to be lessons that you're going to learn. Do your best to learn as many of them as you can without losing too much money. But that's the mistakes for today. I did lose $2,900. I hope you guys enjoyed today's market recap. Jerry Trades of SoCal Trading Group, over and out.